Good morning, Oracles. Well, good golly, can we go any lower? We keep thinking, when is the dip going to stop dipping? Well, clearly not yet. We're going to keep on going down. We sort of looked like we might be starting the day good yesterday, and then it fell all apart, and we're down 7%. So what's going on? Well, we broke our 770 support. We're down to close to 750. So at this point, we can keep on going down. Looking at my forward PE, I had us at 14.79 for an EPS at the end of the year, and that's a PE at these current prices around 51, which is really, really low compared to where Tesla was in the past. However, for growth companies, it's low, but when you compare it to like a software company like an Apple, it's not. Now, granted, Apple is near the top of their S-curve, whereas Tesla is at the very beginning of their S-curve. So what this means is that as we're compressing all of this PE down and all this valuation, it just means that it's going to springboard higher even faster later. Something we had talked about yesterday. So, as the stock price comes down, the compression of the valuation comes down, and then as the exponential curve grows going up, the stock price will inevitably have to catch up with that. And as it does, we will climb very quickly. So all the money that you are investing now is going to turn into a beautiful fortune later. This goes back to all the people who invested before 2019. Anybody who is a subscriber on here who has been invested for more than 2 years understands the pain that it can be going through for Tesla. And these times right now are really nothing new to any long-term investors that are out there, because this is, the same that they went through. Heck, 2018, Elon was sleeping on the floor, and during those times, we didn't even know if the Model 3 was even going to happen, and so if that never even happened, none of us would be here talking about Tesla right now. So there was so much FUD back then. The difference back then is the company was not profitable. Now we are profitable, and because we're profitable, all of this pain that we're going through right now is just a stronger sign to invest and buy, because we have profit coming in. We have such great cash flow coming in that we are one of the strongest companies that are going to come out of this correction that we are going through at the moment. And as I talked about last night, fortunes are born during a bear market. Tesla is definitely in deep bear market territory as we speak. So looking at that, this is the time where you want to buy this fudge. Buy the fudge, get your fortitude out, be strong, and you will get through this. And when you look back at this 1, 2, 3 years from now, you are going to be so grateful that you bought at these prices. Think about right now, if you look back and you said, oh man, I wish I bought during the COVID pandemic when it first hit because the prices were so low. Well, guess what? That was a global pandemic. Doesn't get much scarier than that. And guess what? We came out of it. So what FUD could we possibly have going on right now that's scarier than a global pandemic? Russia invading Ukraine? Scary, and it really sucks for the people involved, but it's not scarier than a global pandemic. What else is going on? Inflation is super high. All right, great. Can that get out of control? Absolutely. Definitely something that we want to monitor. But is it worse than a global pandemic? No, absolutely not. So we are going to get through this. And thinking about the fact that regardless of what we go through, if we go to any point where something is more severe and more drastic than a global pandemic, we've got bigger things to worry about than a stock market dip. So if that's a concern of yours, don't even worry about the market. But if you are looking at this going, okay, the market is the biggest concern that you've got, buy. Just buy. Buy Tesla as you are right now, because this is when your fortune is going to be born, is right now during these times. Now, we do have some more room to go down. We sure can drop even more. Maybe we drop another 10% from where we're at right now. It's totally possible. I got no idea where we're going to hit the bottom. We've broken every threshold that I thought we were going to hold. We held some for a long time. 800 held for a while and then it fell. So right now, don't know where we're going to go down to. 650, 700 were both strong holds that we had for a while. So maybe we'll stop at 650. Either way, as we're coming down, I'm going to be buying more. I'm going to be wise about it. I'm not going to dump all of my money in right now. I still see at least 6 to 8 months of uncertainty and then another year before we can see an actual climbing out of where we're at right now. We've got to get through Russia-Ukraine. We've got to get inflation in line. We've got to get our interest rates back up. And this can't happen overnight. This is going to take time. And so in that time, we're going to figure things out. One of the things I relate it to is, they talk about when you're in a relationship with someone, when you break up with them, if you break up with them, it takes you half of the time that you were together to get over that relationship. So if you were together with someone for 2 years, it will take you about a year to get over them. Same's going to happen right now. We've been going through the pandemic euphoria with interest rates being at 0 for about 2 years. So it'll probably take us about 1 year to get over this and get out of it. And as we come out of it, the strongest players are going to be the ones that come out strongest and fastest, and Tesla is going to be one of those. And eventually all of this FUD, all of this fog is going to lift, and we are going to come out of it. So right now, when you are investing in Tesla, you're investing at a very low price. And just looking at the fundamentals, looking at Shanghai produced 68,000 vehicles in January. That's the most vehicles they've produced in 1 month ever. They're at a run rate of over 800,000 vehicles annually. So we are really pushing those limits. Going back to rumors that we heard back in December about Shanghai, about how they were talking about hitting run rates of around 1 million vehicles annually come March, we are on pace for that. If we are at 800,000 in January, we're pushing a lot closer to that coming into March. So we'll see how that goes going forward. So between 800,000 coming out of Shanghai, another 600,000 coming out of Fremont, that's 1.4 million alone out of just those 2 factories. That doesn't even include Austin or Berlin. Obviously Berlin's a questionable one, but they should be coming online in March. And if that's the case, my base case scenario of 1.81 million, I am still holding to. And so we've got these strong fundamentals of production. The demand is still high. They've basically sold out of all their vehicles for the entire year. So we have all of this demand. We have the production to be able to get that demand filled at about 1.6 to 1.8 million vehicles. That alone is just, the sales are still there. So the company is still pushing its butt going forward and producing all of these vehicles, driving themselves forward. And the stock price and the whole entire market just are not reflecting this. Eventually it will, and you're going to want to be invested when it does recognize that. And I was having a conversation with a few of you in the comments, about catching a falling knife. And sure, from 1,200 all the way down to 750 where we're at, feels like you're catching a falling knife. But if you're a long-term investor and you're dollar cost averaging, you're not catching a falling knife. You're just buying the stock that keeps on going on a better sale every single day and lowering your dollar cost average. And as you're doing that, when everything turns around, you will have more shares at a lower price, which are going to be worth even more in the future as the stock price goes back up. For me, all I know is that I keep on adding every single day. I keep on adding as the stock dips down. I just wish I had more cash to invest. I still do have cash, but again, I don't know how far we're going to go, so I want to make sure that I have enough to keep on investing as we dip further. So right now my strategy is about $15 for every 2% that we drop, and then $15 every day. If I do see some better opportunities, I sometimes add a little bit more. I've been adding more to my son's account as well. He got his report card. He did awesome. So for him, I will put in $5 for every A or improved grade that he has into his portfolio and buy Tesla. And so I was able to put in $25 for him today. Felt pretty awesome, proud dad. And so this is how I do it, and this is how I teach him how to invest as well, and the importance of it. So for me, maybe I'll do that for myself. Maybe I'll invest another $25 in honor of him doing well on his grades. Cool. So, these are things that I look at. This is what I like to do for my investing. I like to make fun of it, and I like to do it in a wise manner so that I can keep on investing further forward. And I know the lessons that I have learned over the years were to make sure that I have this cash on hand. Very, very often over the last 3 years where, we would hit these times of a market sell-off, and I'm like, oh, I have no cash. I'm totally 100% invested. I can't even take advantage of these opportunities. Now I gotta wait. Those are the times where I would get emotional and I would sell out of stocks and for a loss because I wanted to have some cash. Never worked out for me. So I learned how to have cash on the side, learned how to make sure I have cash flow coming in to be able to invest in these awesome times for Tesla, to be able to build this fortune up. And I cannot wait for us to split later this year and get myself even more shares and build my fortune even further. And now the stock price is actually below my cost basis, so I am lowering my dollar cost average as we speak. I am loving this. I want to keep on bringing my dollar cost average down. So let me know in the comments below, have you been bringing your dollar cost average down? Or have you been in this for a long time, since before 2018, and you're still buying because you know it's an awesome investment, but you're bringing your dollar cost average up? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.